Hey, good afternoon, traders. This is Trader Tim from eMiniMind.com doing a Monday market analysis video. Today is the 22nd of January, 2018. A good start to the week, another relentless day to the upside. You can see on my daily chart here on the left just how extended we have become, keeping my trend line on the chart. It just gets more and further away from our trend line. Now, going into the week, I had this 28.25 target drawn up, and that's just from our one-day pullback on the retracement to 27.71s. So we've hit that, and we can draw up the next retracement from the low at that entry to highs. That puts us the next daily long up here at 2800s, nice round number, some support. Now I wouldn't be surprised if we continue higher, maybe a gap up tomorrow. Now if we gap up, be watching for that gap and crap, or kind of that gap up and then sell off, kind of like we had here last week. So I'm not overly bearish at this point, meaning I'm not going to fight the bearish setups. I'm not going to fight the bullish setups by trying to pick a top. And so my strategy going forward for the week, I want to see us break the trading hours only 61.8. And so what I mean by that, if I go to today's chart, just pull up a 5-minute chart of today. If I were to start from the low on the morning and just start drawing up to highs, notice how we have not broken the 61.8 of the daily, just trading hours only, low to high. And so here's the 61.8 down here. And as I just showed you, even when we had our little pullback this morning, we did not break the 61.8 of the trading hours only, low to high. So until that happens, I'm going to pretty much stay out of trying to aggressively get short or call a top or anything like that. There's going to be a ton of opportunities to get short and to take short positions. But in the meantime, there just have not been really any sustainable pullbacks other than what we had last week on Tuesday. And, again, just a one-day pullback. Really not a whole lot that you can ride out with just a one short-term intraday, one move to the downside, and then boom, we give it all back the next day, and we're back to breaking new highs. So that's gonna kind of guide my week. Now, if we gap up and then maybe form a little spinning top, or gap up and then sell off and break the 61.8 of that intraday trading hours only long, let's say we start moving to the upside, and a couple hours or an hour goes by in the day, and then we start to sell off, break the 61.8 and start breaking lows on the day, then I'll definitely be looking at shorts. But again, we've only had 2 days in this last couple of weeks that have broken the previous candle's low on the daily. And those have only been one-day pullbacks, these 2 days here, and then we've just resumed our trend to the upside. So there's no sense in trying to fight it here, trying to pick a top, just because we've been so strong. And every day it seems like there's more people chasing the market and pushing this market higher. Before I talk about a couple of setups, I want to talk about market profile. And this is something I've been using for a long time, and I just haven't really talked about it in the videos too much. But we have a lot of days where the low of the day is the first 30 minutes. A lot of days where the low of the day has been the first 30 minutes, and we've been in these strong uptrends. If I zoom out a little bit, just to kind of get the general shape, the letters aren't that important right now. You can see how these areas of value that I have marked with the darker vertical lines, the value areas do act as support and resistance. So as I go into the next trading day, I take a look at where today's value, where today's trade occurred. And so going into tomorrow, here's where we closed, way up here. And the value area from today is all the way down at 28/28, we'll call it. And so if we were to gap up tomorrow, I would look for some support around that 28/28. It might not be long-term support, but you might have a bounce or an opportunity to get into a long. The market could pull back to 28/28s and then bounce and either form the low of the day or have a nice run off that level. If we gap down, let's say we gap down somewhere in here, well then I'd look at value area low, which will be right about 28/17, and I'll look for that level to be an area of resistance. And the same thing goes for, let's say we gap down and then we keep moving lower, keep moving lower. It doesn't even have to be a gap down, but a move lower. Then I'd look for this area from a couple of days ago, 28/08s, to act as resistance. And so if we're moving down, 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 I look for a bounce or an actionable trade down here at 28/08. So that's kind of how I use the value area to get a sense of kind of generally where the market is going throughout the day. And I'm charting this throughout the day, which is I find helpful for my trading. But more importantly, to get those support and resistance levels kind of just on a post-it in front of me or know where they are so that throughout the day I can have some key levels that I can look to be actionable around or be getting involved in the markets around those levels as opposed to just sort of getting chopped up or placing trades just at random points. So knowing that going into tomorrow, that gives us kind of a framework for the day or a couple of places to watch for. I don't like putting the lines right on my chart, but I will put them on a post-it or a legal pad next to me and just keep an eye on those throughout the day. Now, this afternoon, so we rallied pretty strong this morning, had a little pullback, so a little bull flag here. Not little, fairly large. And then same thing in the afternoon, rally, pulled back, traded at the 50, and then another rally. So the bull flag, the pole, and then the consolidation being the flag, and then another straight up move into the close. And so when you get a situation like this, where you pull back to the 50 and you trade at the 50, you can draw the opposing short to determine when the short fails. Now the long has the weight, has the momentum. So we got the short failure there after the bounce, and so you can take the next setup that occurs from that entry at the larger 15-minute level up to highs. Come on. Up to highs. Well, when the market's so strong that we don't pull back all the way to the 50, or the market comes down, touches your order, and doesn't trade through, so you don't get a fill, then you can look for the next setup to trade. And so we have the big 15-minute below us. We have the first long setup that was off of that level. Didn't pull all the way back to the 50, but there's clearly buyers. Then we broke out of highs, so just grabbing that anchor point that came down close to the 50 but didn't touch it exactly, and pulling to highs can give you the next long setup. So you can see how we kind of set up in a series. So we have the bigger 15-minute level gets identified. We try to get in on the long here. It doesn't make a full pullback, and then you can take the next setup, especially when we break out like this we make a new high so that the pullback is sort of sitting on top of this this support now back here, and then using that as your long entry. So even though you're getting long a little bit beyond the initial 50%, you kind of go through that systematic process of trying to get long, and then you can either use that negative 23 up here from the larger 15 as your target. So even though you're entering on a 512, a smaller setup, you can use the bigger setup below you as your target. And as always, I like to try and trail my stop as well. So I'm not a huge fan of trading late in the afternoon, but it's a good setup here that we can use for kind of walking through something that happens quite a bit. So even though this occurred in the afternoon, it's something that I've seen in the morning as well. So keep your radar up this week for things that might start to look different, signs that things are different, breaking the previous candle's low, a down day, just strictly a day where the market closes down. I mean, these aren't. It's not like you have to dig through the weeds too hard to find something that stands out at this point, because every single day has just been so strong and making new highs. So be on the lookout for some of those cues that the market might be changing trend, and then it's at that point that we can start to look for short trades and see if there's some opportunities to get into an early start of a more sustained pullback, as opposed to trying and shorting just in these consolidation areas that just end up chopping you up without really any sustained move to the downside. So there's a ton more over at eminimind.com. And as always, if you have questions, feel free to shoot me an email, tim@eminimind.com. Thanks, everyone, and have a great week.